Samsung Electronics, the world's second-largest phone maker, is facing significant pressure due to the threat of U.S. tariffs, which are rattling the South Korean economy. The company produces around half of its handsets in Vietnam, where a proposed 46% tariff on goods entering the U.S. has sent shockwaves through its supply chains. Despite the uncertainty, daily operations at Samsung's factory in Bac Ninh province, Vietnam, remain unaffected. Workers like Nguyen Thai Mai and Le Van Binh Express hope that the Vietnamese government can negotiate a favorable deal with the U.S. to mitigate the impact of the tariffs. Samsung's decision to invest in Vietnam was driven by the significantly lower labor costs compared to South Korea. However, the U.S. tariff threats are now challenging this strategy, as absorbing the proposed tariff cost could expose approximately 33% of Samsung's smartphone operating profit. If the tariffs are implemented, Samsung and fellow South Korean giant LG might be forced to shift their investments to the U.S. to maintain or expand their presence in the strategically important market. For Samsung, high-end televisions are a key driver of revenue in the U.S., with most TVs sold in North America being produced in Mexico, thus dodging the latest round of tariff threats. The tariff threats are part of a broader strategy aimed at securing additional foreign investment, but many experts believe these measures will not last in the longer term due to the U.S. lack of a strong domestic base for producing high-end chips. This vulnerability is underscored by the fact that net exports accounted for more than 90% of South Korea's total economic growth in 2024. The South Korean government is scrambling to contain the fallout, with acting leader Han Duck-soo speaking to U.S. President Donald Trump and the trade minister flying to Washington for emergency talks. The government has announced support measures for car makers hit by sector-specific tariffs, but needs to do more to help export-focused conglomerates like Samsung. In summary, Samsung is under pressure as U.S. tariffs threat to disrupt its global operations and impact the South Korean economy. The company is exploring strategies to mitigate these effects, including diversifying production bases and potentially increasing production in countries like India and Brazil, which offer lower tariffs and geographic advantages. Don't miss the latest news from the world of technology and finance. Subscribe to our channel now.